Today we're going to talk about 501c3s, UBI taxes, and restricted versus unrestricted funds. Section 501c3 is a portion of the U.S. International Revenue Code and a specific tax category for nonprofit organizations. Organizations that meet the requirements of Section 501c3 are exempt from federal income tax. While the IRS recognizes more than 30 types of nonprofit organizations, only organizations that qualify for 501c3 status can say that donations to them are tax deductible. To receive its favorable tax treatment, the nonprofit organization must not deviate from its purpose or mission. To be considered a charitable organization by the IRS, a group must operate exclusively for one of these purposes: charitable, religious, educational, scientific, literary, testing for public safety, fostering national or international amateur sports competition, or preventing cruelty to children or animals. To be tax exempt under Section 501c3, an organization must not be serving any private interests, including the interests of the creator, the creator's family, shareholders of the organization, other designated individuals, or other persons controlled by private interests. To remain tax exempt under Section 501c3, an organization is also required to remain true to its founding purpose. If an organization has previously reported to the IRS that its mission is to help less privileged individuals gain access to college education, it must maintain this purpose. If it decides to engage in another calling, for example, sending relief to displaced families in poverty-stricken countries, the 501c3 organization has to first notify the IRS of its change of operations to prevent the loss of tax-exempt status. The 501c3 status offers many benefits to the designated organizations and the people they serve. For one thing, the 501c3 organization are exempt from paying federal income and unemployment taxes, and patrons who donate to them are allowed to claim a tax deduction for their contributions. To help with funding and further their mission, these organizations are eligible to receive government and private grants. To qualify, the organization must have a mission aligned with the purpose of the grant and a need for it. Now we're going to move on to unrelated business income tax, or UBI tax. Nonprofits earn income through their programs like tuition, ticket sales, or services offered. The nonprofit is exempt from paying corporate income taxes if the income is related to the nonprofit's mission. However, some nonprofits will have an income-generating project that is not exempt. The International Revenue Code Section 511 to 514 shows an overview of UBI tax. If a nonprofit earns income from trade or business regularly carried on and unrelated to the tax-exempt purpose, it is subject to UBI tax. Trade or business is any activity carried on for the production of income from the sale of a good or the provision of service. Regularly carried on is met when the activity manifests a frequency and continuity and are pursued in a manner generally similar to comparable commercial activities of non-exempt organizations. There are exemptions even if they meet all three requirements. If the work is done by volunteers, the activity is done for the convenience of the employees, or if all items to conduct the activity are donated, they are exempt from UBI tax. Now we're going to talk about restricted versus unrestricted funds. Restricted donations are classified as restricted when donors are asked to give to a capital campaign, a building fund, or a scholarship fund, or if the donor wishes the donation to be used for only one purpose. The designation is either made by a letter from the donor or through an explicit agreement with the nonprofit. Often, grants from foundations are restricted to a particular program or purpose, and that restriction is set out in the documentation that accompanies the award. Nonprofits are required to use accounting standards set by the Federal Accounting Standards Boards. For unrestricted donations, they can be used for any purpose and accounted for under whichever program they were used for. Most nonprofits ask for unrestricted funds when they solicit donors by email or direct mail. Unrestricted funds can be used however an organization sees fit.